Hi there, I'm Bill Cherry, and I'm in Dallas. My heart, however, is in a different place. My heart remains in Galveston, which is where I was born and where I was raised and where I had successful businesses and lots of friends that I'd carried over the years. And I miss all of that. I truly do. I've been here for 19 years now. That's a long time. Longer than I was even at a college town in the several colleges that I went to, longer than I was in St. Louis when I was working there for some time, 19 years. And today, the outside the window here, the sky was clear and the air was just right, and the sun was out, and the grass was starting to turn green. And I thought, why in the world am I not on my skateboard riding down the seawall? Who started all of this? It's it's not easy, I promise. I want to talk to you a little bit today about credit. And I want you to pay attention to this. And if you don't understand it, or you miss it, or you need to do it again, watch this little video again. If you still don't understand it, it's okay with me. Call me, and I will be glad to tell you until you understand what it's all about. In the old days, bankers didn't make any money. They might have made, I don't know, $60,000 a year or something. And people that worked in the banks didn't make any money because the banks didn't make any money. I mean, they made money, but it wasn't like big money. And so that was before credit cards. They, they, the credit cards were made by the stores, and you had a credit card for Foley's or a credit card for Soccerwitz, which, by the way, I still have. One for Neiman's, one for Brooks Brothers. Got them too. And then as time went along, they decided the best idea was to consolidate. So that's when they started with MasterCard and American Express and Diners Club and whatever the rest of them are. I don't even know or care. And from that, uh, a whole new thing was brought out. So people started getting those cards, and they were giving them away. They just give you one. Here's one, you know, and you had some amount of money on there that an amount that was a maximum that you could have drawn out at one time and not have paid for. And it wasn't very much, $500 or something. Banks and savings and loans and anything that was federally insured had to abide by the Fed's rules as to what they could loan their money for. So if I were, say, Bank of the West, and I was able to borrow money at prime, and I borrowed money at, say, 2%, then logically the Fed would say you can make loans from now until the next change at 4%. You could get a 2 percentage point spread. And as far as savings and loans were concerned, they borrowed less than banks, and therefore they were able to loan money cheaper than banks. And that's how they were able to get the loans for mortgage loans, which is what their business was. I suppose that in Galveston at the time I'm talking about, just pull us out of the sky, which you can make it whatever you want it to be, but certainly not any time in the last 25, 30 years. A bank president made $60,000 and he was riding high, and now there are people that are working for Chase Manhattan Bank that are barely 40 that are making $11 million a year. $11 million a year. Where do you suppose that's coming from? Well, where it's coming from is that the Fed has removed the ability of the lender to have to abide by a ceiling. That if he was borrowing money from the Fed for 3%, then he could do whatever he wanted to with it. If he could make somebody pay 25% for us, fine with them. They didn't care. So in the meantime, that was all it took to get credit cards moving out fast. Now, credit cards are known as revolving credit. Revolving credit. And it really basically is a revolving loan that you pay on it, and you can pay it down, and you can pay it back up again, and you can put it in the middle, and you can do whatever else. And at the same time, the bank can also change the interest rate that they charge you anytime they want to without you knowing about it. I mean, you can go look and see if they've changed it lately, but you don't know. All of a sudden, you get this big monthly charge, and you say, "What's going on here?" And then you realize that you've come closer to your maximum, and as you come closer to your maximum, the bank assumes that their risk being the bank's risk, is greater than it was when it was only half that much. So rather than to just reduce the amount of money that's left on the credit card for them to borrow, which is the way you solve the problem with somebody wanting to spend more money than they've got, you let them go forward with it, but you raise the interest rate because your risk is higher. Now, explain to me how that works. Your risk is higher. Rather than to try to solve the problem, you make it worse. Okay? And constantly, the credit bureaus are running things to find out how you're doing. How's he doing? How's old Bill Cherry doing? You think he's still got too much borrowed against the money? I don't know what he does or not. Same with Wanda. You think Wanda's got to? She shouldn't have bought that fur coat over there at wherever it was, Neiman Marcus. And she's got $3,000 more on her credit card. By golly, I bet she needs to be held back. The way we do that is we raise her interest rate so we can increase her monthly payment. So what you have now is a thing going wild. We also didn't allow branch banks from city to city to state to state or any of that sort of thing. That they did that before the Depression is one of the main reasons that we had the Depression. And the law was changed that they couldn't do that anymore. And then somewhere along the line in the last however many years, they decided they'd drop all that. And that's how come those guys were able to make so much money. So here's what I want you to do. Think through this. If the bank offers to increase your credit, don't do it. Don't do it. You don't need it. If you can't pay for it, then you don't need it. If you got, say, a card, some of those cards have now got $50,000 worth of limit on them. How in the world does anybody, whatever they're making, ever pay off a $50,000 loan when it is a credit loan? If you need $50,000, you need to get a personal loan, which is amortized over some period of time. You get all the money up front, and you pay the monthly payments. They're the same until the end of the time period, which is either 5 years or 7 years normally. And you don't have to worry about it. You know what it is. And they can't change the rate. And they can't cut you off. That's what it's all about. Pay attention to old Bill. I've been around a long time. Good luck to you. I just hope that you'll pay attention to what I was explaining to you this. And if you don't get it, please call me. I try to do my best to try to save you from falling into one of those traps, because they are traps, and they're nasty traps. Some of those people will be paying those things, and they will die, and their uh, beneficiaries will still be screwing around with those darn loans, trying to figure out how to pay them. And that's is criminal. God bless you. I'm so glad you stayed with me for a little while tonight. See you next time. I'm Bill Cherry here in Dallas.